Joining us now from Zurich is Chief Executive Martin Senn. Good morning, Martin. Thanks very much for joining us.
Good morning, everyone.
I want to talk about the numbers themselves, Martin. I mean, how much is down to increased provisions related to commercial property, and how much is down to the fact that you've restated earnings relating to that change of accounting in your US life business?
Well, we took some loan loss provisions for our non-core banking activities, which amounted to $330 million. That was attributable to the second quarter. And the restatement effect was $700 million from year to year. So overall, we are very pleased with this result, as we have been very well performing in our life business and at Farmers.
I mean, as you say, you've increased provisions for commercial property by 330. Is there a risk that that number will have to be increased again?
Well, as it stands, we feel that we are rather at the upper end with regards to these provisions, but obviously we all have the same crystal ball, and I cannot make a judgment on how property markets do develop in the UK and Ireland. But at this point, we feel very comfortable with the provision as such. And also keep in mind that our core business is insurance. This is a non-core activity. We have stopped writing any other credits and banking-related activities, and we consider this as a non-core activity.
A lot's been made by you, Martin, and by members of your team about potential growth in Asia. Can you begin quantifying for us your targets for Asia, potential growth targets for Asia?
We're not giving any specific targets with regards to our growth, but clearly Asia is one part of the world where we will continue to grow the business and develop the business, and we are well on track with this plan.
I've got to get a question in on regulation. It's something that we're all looking at, especially with regards to the Solvency II regulatory regime. How's that going to impact returns? How's that going to impact your view on potential acquisitions, takeover targets going forward?
We have been managing the firm already for quite some years on the basis of a solvency regime, i.e. the Swiss solvency test, which is the equivalent to the Solvency II. And on the back of that, we are exceptionally well capitalized. We have a very good solvency. So from this point of view, we feel very comfortable with any regulatory change, and this is rather an opportunity for us than a threat.
Martin, we'll speak to you soon. Thank you very much for joining us. The Zurich Financial Chief Executive there, Martin Senn.